Hello， 大家好，欢迎来到这期视频。今天呢，我们来聊 ARK 投资的 Cathie Wood 和 Robinhood 的 CFO Shiv 的一场播客对话。在这次播客中，他们重点讨论了普通投资人如何参与私人市场。这里呢，解释一下，私人市场呢是指不公开交易的，比如说在 VC 或者 PE 或者是没有上市的这些企业进行交易呢，都算是私人市场。那如果大家在什么券商或者是加密货币交易所进行买卖的，这个呢就不算私人市场，而是一个公开的二级市场。大概呢就是这样的一个意思。在播客中，他们聊到了像 SpaceX 这样可能马上要上市的2万亿级别的这样的一个顶级科技公司，那作为普通人如何参与，或者是有没有机会去参与。Cathie Wood 和 Robinhood 的 Shiv 呢，通过各自的企业和他们所代表的不同结构的基金，围绕如何打破传统的投资壁垒，让零售投资人进入私人市场呢，有什么样的一个机会，展开了对谈。按照老规矩，我会把他们这次播客的几个核心观点，用我自己的理解给大家先做一个拆解，辅助大家思考。那我们就开始吧。第一个 Cathie Wood 聊到的是2家企业。Cathie Wood 的原话是 ARK 投资和 Robinhood 有共同的 DNA， 2家公司都希望让普通投资人能够接触到一些前沿的变革性的企业。ARK 投资和 Robinhood 呢有各自的不同结构的基金，双方呢都希望打破私人市场的准入门槛。这里呢先解读一下 Cathie Wood 强调，2家公司呢都希望普通人能够参与原先只有机构和一些大的富翁、高净值的人才能参与的一些高成长的公司。现在呢，通过2家公司的这些基金，一些零售投资人呢也能从中分得一杯羹。举个例子，就像以前只有有钱的人才能买豪宅，但是现在其实有一些投资方式，比如普通人也能通过一些众筹的方式，通过买一部分资产或者买一部分份额，间接的参与到类似豪宅投资这样的一些事情上来。Cathie Wood 强调的就是2家公司目前正在做这种事情，让普通人能够参与到一些高净值或者是机构才能做的一些投资的这样的一个事情上来。第二个，他们聊到的是把零售投资者当作像机构投资者一样来对待。Robinhood 的 Shiv 提到，应该像对待投资机构一样对待零售客户，因为零售客户也会做深度研究，并且零售客户也会长期持有，他们对企业甚至企业的产品有真实的喜爱，而且持有的时间可能比专业的机构会更长。这里来解读一下，其实一些传统的零售投资者并不是单纯的这种韭菜，当然这个韭菜呢要加一个引号。现在的零售的投资者或者是个体，他们也越来越专业，而且呢对企业也很忠诚，甚至是企业的产品都有比较忠诚的态度，甚至呢有的时候比投资机构持有的时间更长。举个例子，就像苹果的粉丝买 iPhone 可能会一直用好几年。第三个，他们聊的是一些合格投资者的门槛或者规则已经过时。他们的原话核心是，目前合格投资者的规则或者门槛，比如说需要100万美元的净资产，或者呢要求投资人有25万美元的一个年收入。这些规则让富人更容易变富，但是普通人呢会排除在一些有价值的投资门槛之外。Cathie Wood 和 Shiv 呢都认为这个规则可能需要改革，应该引入一些更合理的标准。这里呢我也解读一下，他们聊到的是这个投资规则本来呢是为了保护一些投资者，现在呢其实成了一个负担，而且可能会加剧一些财富差距。知识和风险的理解比单纯的财富的门槛更重要。举个例子，就像你去考驾照，不能只看你有没有钱才让你买车，而是要看你会不会开车，懂不懂交通的规则。第四个，他们谈到的是私人公司上市的时间越来越晚，零售投资者呢被严重的错过。他们的原话核心是，比如 SpaceX 估值可能会达到2万亿，但大多数零售投资者是没有办法参与到的。比如像过去亚马逊和谷歌这样的公司，它在相对小的时候就已经上市了，但是现在很多优质的公司，比如说像 SpaceX 这些优质的公司，他们都长期在私人市场上进行募资，等到真正上市的时候体量已经很大了。因为好的公司其实在私人阶段就已经可以融到资，而等到他们上市的时候市值已经足够大了，很多巨大的价值呢就在私人阶段被一些资金给吃掉了。第五个，他们聊到的是2家公司的基金结构。原话核心是ARK用的是主动管理封闭式间隔基金，Robinhood呢用的是纽交所上市的公开交易的封闭式基金。虽然两种结构有各自的特点， 但是他们的目标都是为了让更多的人能够投资到私人科技公司去。这里解读一下，不管他们两家公司的结构相不相同，但是本质上呢，他们都在解决一个问题，或者是两家公司的愿景都是为了让普通人能够方便的且更安全的参与到原来只有机构才能玩的私人市场。第6个，他们聊到的是现在的企业创始人对零售的基金态度呢也越来越积极。他们的原话是，很多创始人现在更愿意去联系 ARK 或者 Robinhood 这样的企业，而不是传统的 VC， 因为他们也看到零售投资者呢也会长期持有，且更懂企业的产品，忠诚度也更高。这里呢解释一下，现在的零售投资者并不代表短期的投机者，换句话说，他们有可能是企业真正的产品的粉丝，而且呢会成为长期股东。举个例子，就像特斯拉的很多粉丝买了股票之后一直持有，甚至呢还会帮助特斯拉做宣传。这种铁粉投资人其实对创始公司和创始人来说，比一些短期的投资机构更靠谱。最后一个，他们聊到的是零售投资者在 IPO 首日往往表现更好。原话核心是，零售投资者在公司 IPO 第1天买入后，持有时间通常比专业机构更长。Cathie Wood 和 Shiv 都认为，这证明零售在私人市场也能发挥独特的价值。解读一下，零售并不意味着追涨杀跌的散户，他们也相信自己所购买公司的产品，反而会让他们的投资行为呢更理性。再举一个例子，就像大家如果每天使用微信，或者是东南亚大家经常会打 Grab， 那么本身是因为你对腾讯或者是对 Grab 这样的公司你有信心，从侧面来说，你也有可能会把他们各自的股票呢拿得更久一些。而机构呢，可能更多的是看好财务数据，可能说调仓就调仓，或者是换仓。总之呢，各自有各自的看法。OK， 以上就是我对 Cathie Wood 和 Robinhood 的 CFO Shiv 这次播客的核心观点的一些拆解和理解。视频结尾是调整后的重点的原声音频，还有中文字幕翻译。原视频链接我放在视频的介绍里面，需要的朋友可以自行观看完整的内容。另外，你觉得普通投资者是不是应该进入私人市场？欢迎在评论区留言探讨。
Greetings, everyone. My name is Cathie Wood. I am CEO and CIO of ARK Invest. And today we have a very special guest. Shiv from Robinhood here is CFO of Robinhood, but he is also spearheading a very important effort, we believe, at Robinhood, and that is in the private space. And we've structured our funds differently. As you know, ARK has ARKVX, that's our venture fund, and it's roughly a $750 million fund right now. And RV1 is Robinhood's new fund. So it's just out of the gate. And we were comparing notes, Shiv, as we heard rumors of what you were doing. And I remember approaching you and just saying, why don't we talk about this a little bit? We're doing this differently. And but I guess the first thing we should talk about is our shared DNA as companies. I know that I founded ARK really to democratize access to transformative companies that we didn't think were well represented in the broad-based indices out there. And we did so with what we call an open source research ecosystem, basically giving our research away in order to educate and inspire investors and others. So I think we have a common bond in that way.
Yeah, no, absolutely. And first, thank you for having me, Cathie. Love the idea of sharing more with retail and comparing notes and structures. And so super excited to be here. I think you nailed it on the head. We have a shared DNA. Robinhood's mission is to democratize finance for all. And every single product we built is around that mission. And so when we thought about private markets, we said we want to do for what we did for the public markets to the private markets, meaning give everybody access. The more people that are focused on providing capital and helping the economy innovate, even if it's competitive, is going really well. And so, yeah, I think I've been pleasantly surprised, both from the founder side, but also from the VC community welcoming us in as well.
Yeah, and I think one reason we've had this response, and you as well, is We are not going to be sitting on boards the way traditional venture capital teams are. Ours is a much more, is a different model. What we are doing is providing the research out there, elevating the companies in terms of visibility in the retail world. And, you know, the retail world is important. These are their customers for many companies, right? These are their customers. And we learned, even though Tesla was a public company, in the early days, it was very hard for Tesla to get institutional interest. Tesla wasn't in a benchmark. It seemed like a wildly speculative company. And yet the research we were doing brought retail along. I think many were there already because they owned the cars, so they had done their own research. But then we added another layer of research, which added to their comfort in buying Tesla stock. Because for every naysayer in the institutional world, we would have some research saying, no, that's not correct, and here's the data. And the one I love the best, I remember it was 2018-19 when Tesla was going through production hell. And I was on one of the news programs facing a debater who basically said, well, Tesla's going bankrupt. And I said, really? So this was manufacturing. I said, you think a company run by a person who has just landed 2 rockets on a barge in the ocean is not going to be able to manufacture an EV? So it was just a very simple way of thinking about it, but it caused some aha moments. I think actually retail ran with that more than institutions. But they came along, especially after Tesla entered the indexes. I think what I'm trying to say is both you and we trying to bring investors along before it's really obvious that they're great success stories, because there is so much value accretion before these companies will enter the public markets or enter an index.
Yeah, 100%. Whether it's retail or someone like yourself or someone like Robinhood, these companies are doing amazing things. And sometimes you have to have a very long time horizon. And institutional investors or even the public markets don't always have that time horizon. But if you use the product, if you do original research, if you allow people to really understand how big it could be, I think that's what gets retail excited. The other point you brought up front is for the companies, we are more akin to public market capital. We don't take board seats. We don't get certain information rights. We want to make sure that we are there to help, but we are also treating them the same way a public market investor would be. And I think that's a little bit different and that resonates with them. But the converse is you can also help them if you have a certain of your expertise. So ARC, for example, you can provide original research. What we have is we are a deep operating company. We've been around for 10 years. We're an S&P 500 company now. So actually some of the companies we've invested in, I've talked to their management teams and they've said, hey, Shiv, we're working on a certain project, or we're trying to look at how we can do IRRs for marketing, or we're trying to look at how you do annual planning. Can you give us some advice? And so again, like, it's just something differentiated. We're an operator and we have a venture capital arm inside of that. So we can provide some operating experience to these companies. You have an investment management arm, but you have original research for the companies as well. What you want to do is just provide something of value to the companies. And once it resonates with them, they're more open to taking your capital. And so we're seeing that's something that's been really helpful as well.
Yes. And we are very happy shareholders of Robinhood, just amazed at your product velocity and, how quickly you're responding to, the retail demands out there. The more you do, the more they want. And you definitely are delighting the consumer and the investor. Congratulations for making it into the S&P 500. It's a very big deal, and a lot of institutional investors were waiting for that moment, of course, to even consider you. And that's, again, an interesting way of investing. Is probably just a safer way of investing, but it also leaves on the table, as I mentioned before, tremendous value accretion. So just one final way of thinking about retail versus institutional. You know, in the day, retail money used to, and this was probably institutional talking, used to be considered dumb money, and institutional, the smart money. I think the tables are turning, and dumb and smart are not the words we should use, but retail is discovering new opportunities and willing to invest earlier than institutional, and therefore enjoy more of the value accretion over the years.
Oh, yeah. So one thing that we see with our customers is they tend to be techno-optimists. They tend to have long-term time horizons. They tend to buy companies that they know and love. They tend to really like frontier technology companies. So I think there's a little bit of a misnomer about, oh, you're a Robinhood customer and you're a trader. Actually, the vast majority of our customers are buy and hold investors. The other thing we tend to see is they tend to be net dip buyers. So when a stock goes down that they love, because they have such a long-term time horizon, they actually tend to be net buyers. And so you actually support the stock during those periods of volatility. And then on the way up, if a stock does well, they're very happy to trim the position and go back in at another entry point because, again, they have a long-term time horizon. So while some people say retail can cause volatility, when you actually look at the data, and we have copious amounts of data being around for 10 years and 300 billion plus of assets, retail can actually be a volatility dampener because they buy you on the way down, and then on the way up, they can actually reduce their position. So it's a little bit counterintuitive to what you said before. Our average customer today, or median, 36 years old, they tend to be married, tend to have 2 kids and a dog, widely distributed across the US, educated, more diverse. These are the customers. These are the ones who are using the products. These are the ones investing in you. And so, yeah, I think it's important to have both institutional and retail. But I think customers and companies need to understand, what does retail mean? Retail are people that are doing research, long-term time horizons, techno-optimists. So from our standpoint, I think companies should be welcoming these folks and helping educate them and doing what you're doing and what we're doing to give them a long-term seat at the table.
Yeah, it's interesting. ARK invests very much like your investor base does. And many people know this because we post our trades at the end of every day, and they will see that we buy low and sell high, whereas in the institutional world, and this shift towards quantitative research and factor-based investing, they actually follow momentum. They buy into rising price momentum. They buy into rising or an acceleration in growth. They're looking to follow, actually. They're looking to follow. And that's not necessarily bad, especially if a stock has miles to go. But in the world of innovation, where there is a lot of volatility, they can fall into a trap of buying high and selling low just because they are